So the three stocks I'm going to share with you guys today, you definitely want to have on your radar and not ignore this because they are presenting opportunity. The last one is a squeeze meme stock that is projected and speculated to go north of $15 plus. And we're going to break down those levels. So you're definitely going to want to stick around towards the end for that one. And our first one has a price target rating that it recently got after big news. And this is something that's looking like a huge opportunity because it is sitting down near $1 area. And these price targets are 300% and higher from analysts. Okay, so we're going to break that all down. Now, on Friday, the SPY had some chop in the first half, but it presented an opportunity going into the second half, and it sent out a bull indicator over to the Discord and from our 42 vision indicator at the 12:05 p.m. area, and it never got canceled till 5:10 p.m. in the after hours. There was a huge move there from 661 to the highs there of 664, and it presented an opportunity for call options, and call options went up north of 150% plus within minutes to an hour, guys. If you guys want to receive the clarity and edge that you deserve and join the members using 42 Vision to maximize through the volatility, whether stocks are going up or going down, check out the link down below in the description and top pinned comment to go ahead and get connected and join us. Now, the SPY is up here near all-time highs. And you also have Tesla running and holding up, trying to get back up to that recent high up here of 433. And it presented an opportunity as well of a home run going into the open because it sent out a bull indicator from 420, hitting highs there of 429.50. And we could see it here coming in at our Discord directly at the 8:20 a.m. mark. That bull indicator lasted for nearly several hours. And in the open, it bounced and went up to those highs of 429. And call options went up 200% plus within minutes to an hour, guys. If you guys want to receive the clarity and edge, once again, and know about these stocks early on, and join the members using it, and learn the A+ setup strategy that I teach, and everything there is to learn about 42 Vision and how to maximize within the volatility, check out the link down below in the description and top pinned comment to join us and become part of the community. We look forward to getting you connected and having you join us. So the first stock on this list is Kappa, K-A-P-A stock. It has dropped from way up here at those highs after the news that came out in the pre-market on Thursday from 199 all the way down towards 109, and it's sitting right now near 118, 122 into the close. Now, it's hit a dip area twice. And if this is your first time coming across the channel, this is 42 Vision, which allows us to see the dips from the rips. And we use our bull and bear indicators and inflow versus outflow as extra layers of confirmation. And as you see it popping up there, some of the members gained using 42 Vision through the volatility of the markets and charts and using it to maximize whether stocks are going up or going down. And we look forward to getting you connected and having you join us. And also, you can learn all about what it is of 42 Vision through the strategy videos that I teach you and show you step by step in the Discord and Patreon once you join. So here we are with Kappa stock going ahead and doing a full transition, and we're seeing it down here near the $1 area. Now, what made it drop so fast? And how does this not align with what's going on with the price targets and the news? So on the day of the drop, right, it popped up and it dropped. You could see it here. It popped up and then it dropped back on Thursday. It went ahead and had positive phase 2 trial results, okay? And they're looking to proceed to the next phase 3. So things are moving forward with these trials, and it turned out to be pretty positive. Now, the price targets is where things get aggressive here. The lowest one is $4. The average is 8 and the highest is 12. Now, the $4 one came in the same day. And this stock is below that level. There's a 227% upside. And when you look at this guy's history, he has an average return rate of 40% and a 75% total generated profit. and he initiated a buy rating 4 days ago. So this came out basically aligning with the date 9/18 where things dropped and the news came out. So bigger term, right? Bigger picture, Kappa stock just needs to find a support. And based off the history of the chart, we're seeing here as it's trying to test and hold a key level of 116. If that gets broken through, then below that is 105. And then below 105 goes all the way down to 93 and then down towards 85 cents. Now, that's a lot closer to these recent lows and previous lows than way up here near $2. It seems to be a pretty big resistance up here at the 188 to the $2 area, in which we're going to look at here how important those areas were based off our inflow versus outflow. So when we pull it up here, we have an outflow level that is crucial, right? You could see that here. Outflows is red when it's dominating and blue is inflows. You could see these inflow levels looking pretty strong down here at 88, 90 cents, 95 cents. And then what did we do? We rejected when we tried to get up there towards that 198, 190, $2 area. So these are key levels up here to not ignore, especially after that rejection there at that 198 level, and then actually going ahead and falling downwards. Now, we tend to retrace or retest the key supports and outflow levels depending on what is dominating. In this example, if outflows are dominating and we reject it, the level we'll try to retrace and test towards is back down towards these inflow levels. So staying above $1 is crucial, but most importantly, based off the history of the chart, that started to turn things around after that outflow level here at 98 cents. It was down here at 93 cents. So that is the most important support. Anything below that is just pure weakness, and it'll be something to reassess and think about. But staying above $1 or 93 cents and looking at it to find support. And then there's confirmations, right? With our bull indicators, our inflows crossing the midpoint and bouncing back up. Well, there's a huge gap to fill and a possible even breakout to newer highs, right? Because based off the history of the chart, it can go all the way up to 250 and it could go all the way up towards 321. Now, it hasn't seen these levels since the beginning, right, of the year, but here it is coming back up, right? So this is going to be crucial to stay above $1 and most importantly 93 cents if there is a continuation of a possible pullback. And I like to call that the setup before the next bull run. And it's definitely one to be watching with the news that came out and also looking at it as could this be an overreaction and those price targets. The next stock is CMPX stock. Now this stock is falling, but it's well above $3. And that's a key level here. And we're going to talk about it because way back in August, this stock fell from around this level all the way down to 248, came back up towards the $3 area, tested it, the 270 area, and then started reversing. Now, it had to do with an offering that it had. Okay, that is the most important thing that happened back in August on its drop. And the interesting part was the stock was below the offering price. And here you could see it. The stock was sitting at around 269 and ran up, fell down to 249, ran back up to $3. The offering was closed, went below it, but the offering price was higher. So that's actually something positive. When the stock is actually below the offering price, it tends to retrace and retest it and possibly even break out. And that's what it's done. And it's back above $3. And here you could see it. Compass Therapeutics announces pricing of upsize 120 million public offering. That was back in August of 2025. And here you could see it at a public offering of $3 per share. Okay, so the stock here wasn't an offering below the level or very far away from it. It was just a few cents above. And what did it do? It just gravitated back to it. That was kind of a little bit of a shock. People felt like it was dilution probably back in August, but here we are in September and it's pushing back up. Now, we just rejected a recent high up here. This is the highest that we've seen the stock in months and probably almost a year, right? Way back in February and also last year back in December and January. But here we are with it pulling back slightly. This could be a setup for a nice bull run. And why? Well, the stock, as long as it stays above $3, that's a strong support. if 330 gets broken through, well, then that's something to watch between 330 and $3. That is the hot spot that I'll be watching for a possible reversal, and there needs to be those multiple confirmations. Right now it's under a bear indicator. So on the 1 hour chart, we're sitting at a crucial inflow level right here at that 338 to 329 area. If that gets broken through, again, that area between $3 and 330, I will not ignore. Now this inflow level is crucial up here from 345 to 367. And then we have a big outflow level here when we rejected in the pre-market on Friday that high of 394 and dropped and broke 360. So if this could be used as support or anywhere in this area and there's a quick reversal, the first retest is getting back to 360. All right, so jumping from down here at 330 to 360, that's nearly 10%, and anything above that is 10, 15, even 20% north, right, to the upside. Now, when you go ahead and look at it from the 2 hour, same thing. These levels are crucial. Big inflow level here. And then the biggest one is down here at 275 where things really accelerated and then started to pause. So that's crucial. And then the 30-minute, we could see the tight levels, right, of these inflow levels. And then you'll also have this inflow level here of 345 that was holding up this chart to 354 before testing that new high and recent high. And that's where the outflows really accelerated. So we have tight areas of support and resistance. And again, this is really where 42 vision gives us that edge within the volatility to clearly see the strength of trend and where the strength of supports and resistance are aligned with our inflow versus outflow if it's crossing the midpoint to the upside or to the downside, which you get connected to once you join, and you can gain access to it and receive that clarity and edge through the volatility, whether stocks are going up or going down. The next stock is a meme stock right now, and it had a switch with the CEO, and it added to its board of members again, the founders. This stock is important because it's at crucial levels, and everyone's speculating it could go north of 15 plus if the squeeze continues. And the stock is open. Open Door Technologies Inc. is up here fighting to hold above that $8 area where it actually found strength and bounce back up to retest 1080, 1090. And this is the most crucial level to break through to even push higher. Now, when we look at it from larger time frames, this could look like a double top and we may break through support. That is something to not ignore. But if it gets tested one more time, that will be crucial and important. And to that, I have to say, if we test and break through it and go to new all-time highs and 52-week high, I have to say, pump it up. We're up here near these 52-week highs, and everyone is speculating if this gets broken through, the next level is going to be $12 to $15 north. I look forward to seeing your thoughts down below, how you feel about that. But here we are under a bull indicator since the 605 level, and this is a crucial support, 840 to the 850 area, and then 874 as well right there, which it actually bounced off of twice. It was back here on Friday, September 12th, and then also in the pre-market, September 17th, back on Wednesday. Now, the stock is pulling back a bit, but we're still under a bull indicator here on the 2 hour. If you go to the 4 hour, same thing. It's been holding strong since that 605 and 588 level on the 4 hour. And then you go to the 1 hour, there is a bear indicator that just popped up here at 988, and that's going to be crucial to not ignore. You want to see this get canceled and inflows to follow and cross that midpoint and push up higher, right? To retest these resistance levels up here and break out, which are inflow versus outflow. We're going to take a look at here where they sit. So on the inflow versus outflow, on the 1 hour, we can clearly see here inflows dominating here. Blue is inflows, red is outflows. You could see that data there showing us 1.3 million of inflows and then actually pushing upwards, right? A big bounce there from 889 to the highs up here recently of 1086. Now, outflows appeared the next day, and you could see that red is dominating 8.6 million. Now, this is where inflow versus outflow shows us that clarity, right, of the supports and resistance. We have the bull and bear indicators there to look at the strength of trend, but this is going to be the most crucial level because then there's a huge gap to the downside to fill, and our next outflow level versus inflow level down here near 577, 587, all the way down to 560. And that's where the big push started and the news came out. But right now, before even getting there, this will be crucial. If this gets tested one more time, this is the area that needs to hold. So there could be a possible retest and retracement to this outflow level and a possible breakout even higher to continue that squeeze and shorts covering, right? Because that will accelerate that push up towards the possibility of $12 and $15. And you could see it here even on the lower time frames, right? The 15-minute big outflow level there between 980 to 1020, and then right above it 1030 all the way up to the 1090, 1080 area. And then down here, this is a crucial support, this inflow level. This is the one thing holding up this chart. These two levels have been pulling it downwards, and they're huge resistance levels, and it's going to be crucial to break through them to even continue momentum or go anywhere higher. So I look forward to seeing your thoughts down below. These are the key levels to the upside and downside. I'm going to be watching them very closely here. There's still a strong bull indicator on the larger time frames on open door, even though the lower time frames are showing bear indicators, and there's still these inflow levels here to not ignore that are holding up this chart, and they could be strong areas of support to try to go ahead and prepare for the next bull run and next move. And especially if it accelerates back to the retracement of these inflow versus outflow levels on the top end, well, that's where the covering may accelerate and push it up to new highs. As always, guys, thank you guys so much for watching, and let's make some money.